Hello, folks. Let's continue here. This chart is a long-term comparison between the mining stock sector and the broad market. And so for the mining stock sector, I'm using the gold bugs, HUI. That is the gold mining stocks index for which I have the most data. And so that's why I'm using UE as my proxy for the mining stocks. SPX, obviously, that's what we're comparing against. I've got data all the way back to 96 here. We're in the weekly time frame. And there's a couple of points that I'd like to make here. So if we zoom in, and apologize if I move around too much on this chart. This is back in the end of the bear rally in metals, and so there it is. Wherever you want to, there's a couple of different ways to call the end of it. That's January of 2001. But anyway, the point is that at somewhere in this time frame, the mining stock sector became the darling of not only institutional money, but then the retail sector as well. Probably a lot of this initial action, that's institutional money, and then eventually retail catches on to the latest trend. And so during this time frame, I was a subscriber to Richard Russell's newsletters. And so what he regularly told his subscribers throughout this time period is buy and hold the mining stocks. Don't try to trade in and out of the market unless you are a skilled trader. You're likely, probabilities suggest, you'll make more money with a buy and hold strategy and dollar cost average. That was part of Richard's, what he was suggesting as well, was when you had new money available, dollar cost average into the stocks. And again, don't worry too much about where they're at in their short-term cycle. You're looking at the big picture. And so anyways, a couple of thoughts from Richard Russell. And so as I have been watching this chart for the last, 9 months or so, I've been waiting to see, I was looking back here, and what I was looking to see back here was the mining stock sector yet again beginning to outperform the broad market. And so I believe that's what we're starting to see right there, folks. Is the mining stock sector poking back up into this? It's a market darling again. And if you follow the headlines in the financial sectors, one of the ideas that's currently floating around is sector rotation. Well, one of the sector rotations, I'm just suggesting, is into mining stocks. And so that's an idea there. And the reason I'm focused on this idea, the idea that the mining stocks are outperforming the broad market, is that I'd like to be able to suggest to people, buy some mining stocks and don't worry about them. Tuck them away. They'll do just fine. We'll talk here in a couple of years and see where we're at. And so anyway, that's why I'm watching this chart. Let me go back to, did we have anything else there? Yeah, sector rotation. So that was Richard Russell again. Record earnings. Fourth quarter of 2025, not only are the mining stocks as a sector already possibly starting to outperform the broad market, we're coming up on fourth quarter earnings, which for both the gold and the silver stocks are going to be outstanding. They should be across the board, unless a lot of risk in the mining sector. Bad things can happen, but short of bad things happening to any given mining company, we ought to see record earnings, historic record earnings across the board for all of the mining companies. And so, if we go back here and the idea, what we're chasing here or looking into, investigating, is money likely to flee the mining stocks? Well, no, no. Not only do we have we've got a sector rotation going on, folks. Money is not moving out of the mining stocks. Money is moving into the mining stocks. And we could talk about, if we look at the big pool of investable money, it's big pool. There's less than 1% of that pool currently invested in the precious metals sector. And so when institutional money and retail money decides to move into the precious metals, the potential is there for a flood. And the only way an asset category can handle a flood of new money is by going up in price. And so anyway, I'm up on my soapbox again. Let's see. So anyway, that's coming up. And so what is the likelihood that institutional money managers, knowing that we're about to have record earnings in the mining stocks, what's the likelihood of them pulling money out of the mining stocks at this point? They could. Will they? I don't think so. Let's go look at, continuing with
you don't have the ability to
continuing with this same idea. Let's go look at, this is the price action in Friday's market. Well, there's Hecla up 5.2%. Does that look like a mining stock sector that's about to crash? How about, this is WIPM, WPM, Wheaton. And so we have to, on the topic of hedging, this is one of the things we could talk about are we talking about a junior miner, or are we talking about a mega cap miner? And so when we look at Wheaton, clearly we're talking mega cap here, and we might use a different hedging strategy on a mega cap than we would use against a smaller company like G-Roy. And so just as a possibility, but focus right now is on Friday's price action. 5.2% in Hecla, Wheaton, not a big move, actually a little bit of a pullback. But, look at that over the last, that goes into the last trading week. Every one of those is a bullish candle, folks. Every one of them. And so anyway, this is tremendous energy being displayed by a mega cap company in the precious metals mining sector. And so are institutional money managers going to pull their money out of Wheaton? Maybe. I don't think so, but they might. The mining stocks, the behavior varies from stock to stock. There's G-Roy. That candle on Friday actually looks a little bit toppy. If you focused in on that particular candle, you might say, OMG, G-Roy's looking toppy. I better run, run for the hills, hide the children and livestock. On the other hand, G-Roy has had this big run. It's not surprising that it might need a rest. And then let's continue. So Avino, this is my opinion, more of a speculation, albeit a $6, $7 speculation, but 2%, 2.6%. Core is up 6%. USAS is up 4.8%. Anyway, in the big picture, does that look like a mining stock sector that's about to crash? Not to me. I'll leave it there. There'll probably be a part 3 because I'm not done. See you, folks.